do a download of your brain about investing, and so our community can be smarter as a result. So before we set off with a few questions, let me then introduce. So Ben is a 3 times founder. You've done 1 exit. You've done 35 investments, and you're based in Atlanta. Is that accurate intro?
Yeah, good intro, Raymond, and no pressure on the my brain helping to make everyone smarter. I'll try to live up to it.
You will. I certainly will. And not only have you done built startups, exited, done so many investments, but also you've been involved much in the VC space. So you have like seen it all, or have been seeing it all. So like first and foremost, why are you doing startup investments out of all kind of investments you could do?
Yeah, it's a good question. So the first thing I'll say is that startup investing is part of my overall personal investment strategy. So there's 2 parts that guide that. One is, of course, the financial and investment strategy, but the second piece of it is a passion, right? Of course, I have history as a founder, but really what I found to be my big passion in startup ecosystems is helping early stage founders, helping people get access to capital, access to knowledge to be able to see if their idea has legs and if it has room to grow and if it has potential. So investing as an angel investor or as an early stage VC both fits within my personal investing strategy on the higher risk, higher reward end of the investment spectrum. But it also feeds into my purpose, which is, yes, you can give knowledge to early stage founders to help them scale up, but giving knowledge with capital is really an even stronger proposition to help them grow.
Okay, we'll have a follow-up question there. But let's move on to what's your investment strategy? How do you make decisions? Are you picky on deals, or do you want to invest in as many as possible to collect data points? Do you have a strategy around like, hey, this is really like them? Do you expand the amount you invest, or are you keeping yourself disciplined to amount per deal? So what's your investment strategy?
Yeah. So the first thing I'll say is, what is the first part of the strategy is what is the vehicle you're investing through, and making sure that vehicle's thesis, whether that's a fund, whether it's a syndicate, matches up to your overall view of if you want to be investing in that thesis and if you believe in that thesis. So in the case, for example, of Zeitec, where I'm a co-founder, we're investing in early stage startups in West and East Africa that are digitizing a lot of sort of manual processes that have existed for a long time on the continent. So my first question is, do I believe in that thesis? If the answer is yes, then once I'm inside that thesis, the goal is to stay very disciplined within, okay, does this startup, of course, have potential, but does it match up with what that fund is doing or what that investment vehicle is doing? So sometimes you're going to have a deal that comes across your desk within a particular vehicle, and maybe it doesn't align with the thesis, but it looks great. It's really tempting to kind of really go outside the lines and go for that. My perspective is, if you've made the commitment to stay within a thesis, stay within that thesis. There will always be good deals as long as that thesis is valid, and you have to be willing to let things go that are not within what you're focusing on. So that's really my 2 big things, is finding vehicles where I agree with the thesis and what we're trying to do, what we believe in, and then making sure that when we're investing, are we staying true to those principles?
So how do you define those theses, that what you are focusing on?
Yeah. Well, there's a couple different areas that I look at. One is, and the biggest one to me is talent, right? So in my case, as an investor that works across multiple geographies, Latin America, Africa, Central Europe, my question first and foremost is, what is the talent in this region uniquely capable of doing? What knowledge or skills do they have that maybe aren't present in other areas? The second question is to ask myself, is there, generally speaking, another, similar to how we think as startups, is there another secret sauce that this region has? So in the case of Central Europe, right, we look at incredibly developed and high-level tech talent that is comparable to its peers in other regions in the world, but at a fraction of the cost. So the ability then to be able to scale B2B SaaS or startups that, are pretty quickly scalable from within a talent pool that's based in a lower cost but equally capable region becomes an attractive proposition. So that's kind of how I think of it from a macro standpoint. Then if I'm deciding on an individual startup basis, we're looking at, does this team have experience in this area? Is the market big enough for them to be able to find either their own niche or be able to grow without sort of hitting a ceiling pretty early on? And then the third question for me is always going to be, who is in this space right now and can they beat those players? So those are three questions on an individual startup basis that I always start with.
So you've done, I think, 8 plus at least investments through BADideas.fund. So that means you are not too picky from what is being selected by the IC team, by the investment committee, which you are part of.
Yeah.
And you're joining in most of those deals.
Yeah. Yeah. No. So for me, I think what I have found with the BADideas deal flow, overwhelmingly, right? And you pointed out I haven't participated on every deal, but I have participated in the majority. What I have found on almost every deal is that if we go back to those same principles that I mentioned, which is what is the thesis that I see in the region and what is the thesis that BADideas is building in the region? Do those fundamentals exist in every deal? We look at a Breezeit, we look at a Fuel, we look at a Recruit Lab. These are all startups where their thesis of having a capable team whose tech talent is equivalent to international peers, who are able to build a model at a fraction of the cost of what you would be doing in London or New York or Silicon Valley, and who have experience in understanding sort of, okay, what is the problem that they're solving? If that startup's fundamentals align with the fund and the fund aligns with mine, then I feel very confident that who knows if it's going to work out. That's part of early stage investing, but I think it's a worthwhile deal to go through.
Interesting. Follow-up question. How do you decide how much to invest in a particular deal then?
So the answer to that has evolved over time. In the beginning, when I started out angel investing, I really, and going on deal by deal, I really was kind of a bit arrogant, I think, in thinking like, well, I'm going to know which startups, based on how I perceive their potential to be the best ones, right? So I may invest in 10 startups, but there's going to be a confidence scale, and I should trust my confidence scale and invest more in the ones I'm more confident in and less in the ones I'm less confident in. That hypothesis has proven to be completely false. And so I have moved from investing on my personal confidence level to a model that instead says, even if I am very more confident in startup X over Y, I'm going to invest the same amount. So what is the total amount that I can allocate on a per year basis that I feel comfortable with on deal by deal? Break that down on what is the deal flow coming out of the vehicles that I invest through. So let's say, for example, BADideas last year averaged around 1 deal per month, a little less, but around 1 deal per month. Okay. So if I'm investing through BADideas, but I'm also investing through these other syndicates, then I want to make sure that my total amount, if I have about 50 to 60% hit rate on those deals coming through, how much should I be investing in each one? So that number for me, a lot of people will be surprised to hear this because I've invested much higher sums in structured funds, but that number for me is usually around $2,500 per ticket. So it's not a huge amount, right? I'm not throwing. And I think that's a misnomer that people have about angel investing, is like you need to be coming to the table every time with 50,000 or 25,000. And that's not true. I think if you stay disciplined and you're participating frequently enough, smaller checks that are consistent is a good strategy.
Well, you'll be probably turned away quickly if you go to a startup directly with a 2,500 ticket.
You definitely will. And I mean, I think that goes back again to, if my thesis investing deal by deal follows this idea that I need to start with, what is my view of this market? And is there a fund or a syndicate that essentially has bottled or distilled that view, or with whom I agree, and I can invest through them? I also have a better chance of accessing those deals, right, at low dollar amounts. So in the case of Bad Ideas, right, if I was trying, to your point, to invest 2,500 with these startups, they would probably say, like, no, thank you. That's not really worth our time. But not only does investing through Bad Ideas help me to make sure that there is that filter, that Bad Ideas really is looking at deals that align with what I think and what I believe overall. But in addition to that, it is giving me that access. So it's a double win, in my opinion.
Okay, so it sounds like it does serve you somehow. The work that's being done through Bad Ideas Fund, like evaluating those deals, packaging, that limits you going directly and finding your own deal flow.
Yeah, totally. And you don't really, I'll say this is my personal opinion. I think that angel investing, if you are very early in your angel investing career, investing outside of syndicates is incredibly hard, and you have a very low probability of success. Because you don't really know, you're not experienced yet enough to really know how to formulate your own personal thesis, follow that thesis, stay consistent on that thesis. Investing through a syndicate that has articulated a pretty concise or clear thesis, I think eliminates a lot of that sort of distraction of, oh, this is a great deal, but if it has nothing to do and now you build a portfolio that has no continuity, you're actually spreading your risk. You're not spreading your risk enough, because you're probably investing only a small amount in a ton of different verticals or a ton of different geographies. And so now you need to really get lucky, versus if you're investing in a good fundamental vertical and geography, if you do 20 investments, the probability is that you're probably going to hit, right, with one of them or two of them. But if you're investing like one in Indonesian fintech and one in Nigerian e-commerce and one in Mexican ag tech, and that's your strategy, you really have to get lucky that in those you're hitting. So I think investing through a syndicate really brings that value for you.
Okay, great plug. Thanks, Ben. But that's a good segue into what would be your tips for those angel investors just starting out.
My tip would be, find a syndicate whose thesis is familiar to you. So, if you understand, or you're coming from a region where you might understand the startup ecosystem well, investing in a syndicate that's working on that ecosystem helps you be a little bit more familiar and evaluate deal flow better, and gives you sort of a little less obscurity as you start out. The second piece of advice I would give is, don't think that you should have huge variances in your check sizes. In the beginning, stay pretty consistent with the checks that you're writing. I mean, you can have a little bit of deviation, but don't take huge bets on some and like tiny bets on others. Stay pretty consistent until you start to learn as well what are markers that you consider to be important through experience. So those would be my two pieces of advice. Find a syndicate or syndicates that you understand what they're working on, so you have a little less sort of lack of understanding as an angel investor who's starting out. And second is, stay consistent in your check sizes and investment strategy in the beginning as you ramp up your learning.
Perfect. Now I want to challenge you on the point you made initially, that you like startup investing as an asset class, because there you can not only have the high risk, high return, high rewards, but also you can apply your knowledge and experience and help those investments.
Yeah.
Now, if the strategy is around for you is make many bets, but
Yeah.
don't do a few and with big check sizes,
Yeah.
and then automatically you're spreading yourself thin capacity wise. How do you reconcile these two?
Yeah. So and this kind of comes back to like, I don't angel invest individually, so on my own. And so when I am contributing capital on a deal by deal basis through a syndicate like a Bad Ideas or like a Rising Tide in Nigeria, for example, or Nairobi Business Angels, different syndicates, when I'm investing through each of those, I am also helping support an ecosystem that is formulating as part of its value prop as an investor, capacity building and support. So I may not be the one, right, that's going to then go and say, oh, I can give advice to all 35, 40 of these investments that I've made. But what I can say is I'm also still feeding the management fee. I'm feeding the general financial ecosystem of a syndicate that is building and aggregating that knowledge. The reason that's also important is like, I don't know everything, right? I actually know very little. But if I'm in a network of 100 people and on every check that I write, 2% is going towards essentially building an infrastructure that can harness that knowledge, then I am helping to make sure that other people's knowledge is going to be available as well.
Thanks, Ben. Anything we haven't covered that you think is important to note?
Only other thing I can think of is that if you are starting out angel investing, this is my personal opinion, is that to really understand the asset class from a risk reward standpoint, that's something that you have to look at on your personal basis of understanding the horizons for angel investors. It sounds really cool to say that you're angel investing, but you may write a check, or a lot of times you'll write a check and you won't know for 7 years whether or not that investment is going to be something that is going to be a huge hit for you or not. And so really understanding it as an asset class, I think, is important to your longevity, because if you don't, then you might wake up in 2 years and feel a little bit let down, not understanding why you're not seeing sort of significant changes in your returns yet. So that's the only other piece of advice I would give.
Have you crossed that path?
Personally, I have not, but I have a lot of fellow angel investors who, I mean, a good example is right now, a lot of people's general investment capability may have decreased because of inflation or changing economic situations. And now they're like, well, I don't know, maybe angel investing isn't for me anymore. And so again, it's kind of asking yourself, are you in this for the long haul? Is this something that you really want to be building a 20, 25, 30-year track record if you're a younger person and getting started out in angel investing? I think it's take the long-term view and not the short-term view.
It sounds like you subscribe to the point that this knowledge of investing in startups or not capability or skill to invest in a startup, it can be improved only through doing and accumulates with each next investment. So after a decade, you are just like a crazy great at it, and you are building wealth on the way.
Yeah, you're crazy great at it, and you're probably can still keep improving, but you're a lot better than where you were before. And you've also probably amassed a network of fellow investors from whom you have learned a lot and can continue to learn a lot. I can say that even just, for example, within the Bad Ideas IC and its member network, there's a lot of people who I have learned so much from in such a short amount of time. If I wasn't angel investing and taking the long-term view of building my own knowledge, I wouldn't have had the opportunity to learn from those people. So you learn as much from your own investment as you do from your co-investors, I think.
Well, this was fun. I loved it.
Yeah, same. Thanks, Rymans. And for all the listeners out there, if I hope I fulfilled Ryman's promise and left you smarter. If I left you dumber, then just delete and don't mention it to anyone.